Yes, sir. Yo, what is going on, guys? Welcome to another video. Today's video, we're going to talk about everything that happened yesterday regarding the news, stock market, crypto, you name it. We're going over all that. We're also going to talk about everything that just happened today, especially regarding this recent Q2 GDP print. So let's just go ahead and get right into the video. We're actually going to start off with yesterday. So yesterday, we had the pending home sales numbers that came out of the United States. Those numbers showed that pending home sales decreased 20% year over year in June of 2022. This is the biggest decline since the previous record of 33% slump in April of 2020. For those who don't know, that was during the time when we had that mini recession. We had a recession that literally lasted like 2 months. It was March and April until the Fed came in and saved the day. So we're starting to see those signs again. Very, very interesting. Now, let's actually talk about what happened yesterday and why the market rallied so hard. As a matter of fact, the market actually rallied so hard that the S&P 500 finally went back to 4,000, which I'm not going to lie to you folks, I never thought I would ever see that this year. I never thought I would see the S&P 500 go to 4,000. I thought it would just hang between 3,700, 3,900, and I actually thought it would eventually make that next leg down. Now, that doesn't mean that that still can't happen, but it just goes to show you bear market rallies can really be vicious. But let's just talk about what happened. So Powell actually started to signal a dovish pivot if inflation data rolls over between now and the September meeting. The market picked up on that by listening to his commentary, and the market liked that a lot. And so Wall Street started buying stocks. It's literally that simple, because Powell literally gave hints of a possible pivot sometime around September, which Wall Street has already been kind of thinking anyway, but now Powell actually kind of hinted towards it. So you got that going on. So right now, Wall Street is actually loving Jerome Powell, because Powell is actually giving the market what it wants. Now, Powell actually did say some pretty interesting things. He said there is a chance that we may not need to keep hiking aggressively. The market loved that. Powell also said, I do not think that the U.S. is currently in a recession. Market like that as well. Now, obviously, the recession numbers just came out. All right, and here we go. The Q2 GDP numbers are out, and they do come in negative. Q2 GDP has fallen by negative 0.9%, officially putting the U.S. in a technical recession. This is versus the estimate of plus 0.4%. I'm sure this is probably what the Biden administration was expecting, but it did not happen. There is absolutely no doubt that the economy is weakening. There is absolutely no doubt that the United States is in an official technical recession. Now, we're not in a deep recession. This isn't the worst recession ever, but we are still in a recession, okay? So it's very important to understand that. Now, if you look at some of the estimates, there were estimates this went as high as negative 1.6%. Now, obviously, it didn't get that bad. So it is important to note that the data that came out was actually better than expected. However, we're still in a recession. So I know I've already been watching CNBC. You got some people on there saying, oh, we're not in a recession, blah, blah, blah. No, we are. 2 quarters, negative GDP. We're in a recession. It's that simple. People can dance around it and talk through it all they want, but we're in an official recession. Now, what's going to be interesting is the data that we start to get going forward, and it's also going to be interesting to see how the market reacts to this data. I also want to go over some earnings here, because I'm not going to lie to you guys, this is a very, very real recession. You have a bunch of different companies saying a bunch of mixed things. Some companies are reporting terrible things regarding the economy. Some companies are saying, things don't look so bad, right? So let's just start off with the bad here. So the bad, we have Meta, aka Facebook stock, which fell pretty hard after Facebook issued a gloomy forecast after recording its first ever quarterly drop in revenue, with recession fears and competitive pressures weighing on Facebook's digital ad sales business. And for those who don't know, that is literally how Facebook makes money. They make about $28 billion off their digital ad business. So if advertising is not looking good, that's going to significantly impact Facebook. Obviously, they're pivoting towards the metaverse, but if you go and look at those financials, that metaverse bet is not looking good at all. They're burning way too much money and not making very much money on that piece of their business. Comcast stock actually fell as well, and this was after the media giant failed to add broadband customers in a quarter for the first time ever. That just shows you how historic of a time we're in and how crazy things are getting. Now, you guys know I like to keep these videos relatively short, so let's just go ahead and end this off with going over the rest of the earnings that we saw. So looking at Spotify, according to Spotify, they said, we currently are not seeing any material impact on our expectations for users or sub growth subscriber growth from the economic downturn. In fact, we are seeing several markets trending ahead of our forecast. It's hard to believe, it's hard to be anything but optimistic given what I'm currently seeing. Now, this is what the CEO of Spotify had to say in their earnings call. Moving over to Best Buy, the CEO of Best Buy said, as high inflation has continued and consumer sentiment has deteriorated, customer demand within the consumer electronics industry has softened even further, leading to Q2 financial results below the expectations that we shared in May. So you see this whole recession thing, it's hit or miss. Some companies are being affected, some companies are not, and it's just getting really tricky out here. Moving over to MasterCard, the CEO for MasterCard said that increasing inflationary pressures have yet to significantly impact overall consumer spending, but we will continue to monitor this closely. We have a well-diversified business model and demonstrated ability. Okay, blah, blah, blah. We get the point. Nestle CEO said in the first half of the year, we delivered strong organic growth and a significant increase in underlying earnings per share. So the recession is not really affecting Nestle. And yeah, like I said, I think Visa reported too, and Visa actually kind of said the same thing as MasterCard, that their businesses are really being affected. So literally, some businesses are being affected, some aren't. Now, here's the key you guys have to keep in mind. Even though we're in a recession right now, the negative GDP wasn't nearly as bad as it could have been. I mean, there were some estimates out there that said minus 1.6%. So now it'll be interesting to see what the print for the next quarter ends up being, and if we actually start to make that trend towards a deep recession. And if we do, that's going to affect a lot of companies, and that will affect the stock market. So we'll see how things goes. But we'll see how things go. But anyway, there you guys have it. That'll go ahead and conclude today's video. Thank you guys so much for watching. Feel free to like, share, and subscribe. And I will see you guys in the next one.